So, welcome to our live lectures, Management Accounting for November 2026 examination. And in the next 12 weeks, we're going to be spending the time looking at the various things that we must understand when it comes to management accounting. I want to say that management accounting is an interesting paper, and so you want to make sure you give it your best at the end of the day on the overall. And you have access to the key summary videos in the mobile application, as well as some additional lectures available in the content library, both accessible on the website as well as in the mobile application, to help you to have an understanding of the program. And these live lectures are going to be helping and supplementing every discussions that we are going to be doing over the next few weeks to put you in the position so you can go into the exam or and pass the examination. I believe that everyone on the call is familiar with Microsoft Teams. So, as always, you want to make sure that if there are any questions you have, something you want me to, whatever, any time at all, if you have any questions, you raise your hand, I bring you up. Just the reaction button in your Microsoft Teams, you click on the raise hand symbol like this, then I'll get a notification. Then you come up and ask your question. Alternatively, you can also put your questions or any comment you have in the chat for me, and I'll be able to provide you with an answer. But I will encourage you to really stay connected and be focused as we continue with the discussion for management accounting. Let me say that our discussion on management accounting will primarily be coming in from our book on the subject, management accounting. So, this is our manual on management accounting, and this is packed with the course material, everything you must understand, as well as a lot of practice questions under each topic to help you, multiple practice questions under each topic to help you to really understand and practice the questions at the end of the day. So this is going to be our primary document for reference that we're going to be using. If you don't have any management accounting book, I will entreat you to get it because it's going to be helpful for you. But as I say always, if you have any other book on management accounting, maybe you have bought the ICAG manual or something like that, 99.99% of the time is the same content. You don't have to get this in addition. But in our discussion, significant portion of the questions we are going to be solving, notes to be discussed, everything will be coming in from the book, and that will be our primary source document for this mentorship program as we continue with the discussion. So let me bring up my screen quickly and then let's get excited into the discussion for the day and see how far we can go. So let me tell you some few things that we must get ourselves excited about. Then we can get goosebumps into the whole discussion on management accounting for today. What you need to understand is that in order for you to pass the management accounting examination, there are three core things that I want you to be mindful of. And if you can do these things well, then you can pass the exam. The first is to request your 100% active involvement in the program. What does that mean? It means you have to be fully present and engaged, whether you're on the live call or watching the playback. Listen, this is management accounting. You cannot be on the live call and be cooking banku in the background, or you cannot be watching the playback and be playing Sismi Ludu or be chatting or doing something else in the background. This is management accounting. You need to block the time. It is either you are on the live call or you are doing something else. You cannot multitask your way to pass the management accounting examination. So the first thing I need you to be mindful of is to be present. If you will study, be on the live call, grab your notepad, you have to be taking notes and participate in the discussions. We are going to be solving questions. We are going to be punching. We are going to be having discussions. Participate, take notes, and be fully present. If you have something else to do, I will entreat you, please do that so that when you have the time, you sit down and watch the playback. But you have to block this time and be conscious. Because management accounting is not a paper that you can play around with do whatever you want and walk into the exam hall and think you're going to pass. If you are going to be here, be here. If you are not here, log off, go do something else. Later on, watch the playback. But don't lie to yourself and do adango medadano and be on the live call and be cooking banku in the background. Be on the live call and be chatting with people, family members, and friends in the background. You have to be present here. Why is this important? Because passive learning is the fastest route to failure. Okay? Passive learning is the fastest route to failure. So if you're just here, you're just here, then you're doing yourself like, I don't know, you don't have to be somebody who is just going to be like, yeah, I'm learning. No. If you are here, be here. So that's the first thing you have to be mindful of if you want to pass the management accounting examination. 100% active involvement. The second thing is to have a proactive attitude, and it is linked with the first point, and that is to adopt a student-oriented mindset. Be open to learn and fully participate. You are a student of the Institute of Chartered Accountants, Ghana, and we have said this during our orientation session. Please, you have to make sure that you are fully involved in the mentorship program. Assignments are going to be given. Make sure you complete the assignment. We will be doing performance evaluation tests. Make sure you participate. Mock examination will be done. Make sure you participate. Excuses are unacceptable here. So if you want to pass the examination, I need you to just be a student, just like how we discussed during the orientation session. Be a student, because that is the only way you can pass the exam. But if you come and you're like, yeah, I am busy, I am this, I don't have time, then I'm sorry. You're going to be on this journey for a long time, but you don't have to be. Maybe some of you might have heard that management accounting like 5 times, 6 times. And so there are a lot of people who are gripped by fear when it comes to management accounting. As a matter of fact, there are people who abandoned management accounting to go and do their masters, MBA or MSc or whatever, and then come to take exemption from the management accounting paper, certainly with others, so they can go to level 3. But there are people who come and boom, they pass. There are people who come and boom, they go. So it is not that the paper is difficult. If you don't adopt a student-oriented mindset, and allow yourself to be mentored, be guided, and do what you have to do with discipline and sacrifice, then you will be frustrated. But if you be a student and follow the procedure, be active here, be present, be taking notes, ask questions, solve questions, do assignments, do performance evaluation tests, I can guarantee you, you don't have to write this examination or this paper over and over again. You will go into the exam hall, write the exam with confidence, and most importantly, pass the examination. So that's the second key factor that will enable you to pass the examination. The third thing is time commitment. I want you to, and we've spoken about this as well during our orientation session, that you need to prepare a study plan. You have to commit time to the management accounting. It means that you have to commit a minimum of 8 to 12 hours each week for self-study. So in addition to this live calls, you will be having Wednesday, 6 p.m. to 9 p.m., you have to commit yourself to self-study at least 8 to 12 hours every week by yourself. Solving some questions, going through the topics, doing assignments, preparing for performance evaluation tests, doing something on your own. Why? Because waiting until the final week before the exam will likely lead to failure. Because the average student will say, oh, I am busy. My mother, my father, my children, my husband, my this. Nobody cares about how busy you are. It is not something you would want to hear, but that is the reality. ICA doesn't sit down and say, oh, by the way, 98% of our students are all working, and some of them have to wake up 4 a.m., 3 a.m., be in traffic for 3 hours before they get to work. And so because of that, let's make the exam in such a way that everybody can just come and pass. No. ICAG has a simple rule. Are these questions of a standard required for a professional qualification examination? Yes. Boom. That's all. So you need to discipline yourself, and that is where sacrifices might have to come in. And so if you want to pass this examination, management accounting is not difficult. I don't know what you might have heard. I don't know the experience you might have had in the past. I don't know what someone has told you. But one thing is sure. There are people who write this paper multiple times. And there are people who write it one and boom, they are gone. You have to ask yourself, why do people repeat it, write it over and over again? And why is it that some people come, write it and go? The difference is because of active participation, a student-oriented attitude, and sacrifice to make time to sit down and study. If you can do that, then on the 3rd of November, give and take, you go to the exam hall, write the exam with confidence, and most importantly, pass the examination. So these are the things that you must understand in respect of what you must do if you want to pass the management accounting examination. And by extension, it goes to other subjects. In other words, every subject, for those of you, some of you are doing public sector, we discuss some of the things in public sector as well. It's cut across. If you want to pass any paper, this is your blueprint. Be actively involved. If you're on the call, be on the call. If you're doing something else, get the heck out of here and go and do what you're doing. But don't lie to yourself and pretend you are learning when in reality you are not. Because your brain doesn't multitask to optimize for success. That's not how your brain is. Your brain has to be able to focus on one thing at a time to assimilate and make sure it is retained, hence can be remembered when required. So please be realistic. Don't lie to yourself. And so the question we then have to ask ourselves is, what is the syllabus structure? What is the exam structure like? So let's come to the syllabus for management accounting and our examination. Yes, we'll be having 5 questions coming in the exam hall as always for 3 hours, 15 minutes reading time in the exam hall that the examiner is going to be bringing to us that we need to be mindful of. But the first thing you must understand is that we were going to be having theories in the exam hall. Last semester, July 2026, the theory questions represented 37%. All right? So there are a lot of theories in management accounting. And the exam is going to be some theories, some calculation. And so if the examiner is going to be coming in with theories like this, then it means that you have to be able to prepare yourself to read thoroughly and do calculations alongside. So last semester, July 2026, 37% of the questions were theory. The whole of question 1, theory, 20 marks. Then the rest of the theories were spread across in the other questions. So the question you want to ask yourself is, will you be able to study and put yourself in the position to go? There are some examination diets where we've seen 47% of the questions being theory. Other examination diets, 20%, 25%. But the assurance here is that we're going to be having upwards of 20% of the questions being written questions cutting across various aspects of the syllabus. So as you are learning, don't just be glued to the calculations. As you are, whatever calculation you are learning, the theory aspect is important. Even the calculation process under each topic, the examiner can access as a theory-related question in the exam hall. What does that mean? It means that you have to be attentive. You have to be present. You have to be taking notes. You have to really put yourself in the position so you can study in the manner required to assure you that you pass the examination. And so what are the key areas of the syllabus? Performance measurement. This is question 1 in the exam hall. 20 marks. Sometimes the examiner can do 15 on that, but performance measurement, 20 marks in the exam hall. This is going to be covering a lot of issues, and we'll come back to this later, like ratio analysis, balance scorecard, transfer pricing, divisionalization, return on investment, EVA, like those various issues under organizational performance measurement. Okay, so how do we measure the performance of companies as a whole? How do we measure performance of divisions in a company, and measure the performance of divisional heads in a company? Then non-for-profit making organizations, how do we measure their performance? That is also going to be there. So that's a 20 marks area, quite significant topic. Question 1 waiting for you in the exam hall. The second key area is short-term decisions. This is going to be question 5, mostly in the exam hall. Question 5, short-term decisions. It's 20%, but sometimes the examiner can do 15 as well. And there are a lot of short-term decisions, I have to tell you. A lot. But one of them or two of them, if the examiner get goosebumps, will be coming in the exam hall. Like limiting factor analysis, break-even analysis, relevant cost analysis, pricing decision, throughput accounting, ratio, shutdown decision, make or buy. We're going to get into all of these later as we proceed in the discussion, but these are all short-term decisions. And so that we are going to be applying the marginal costing principle in making these short-term decisions, and we'll come back to this in a moment as we proceed in the discussion. So limiting factor analysis, break-even analysis, relevant cost analysis, pricing decision, make or buy, shutdown, throughput accounting, ratio, and then specialized decisions or transactions that the management accountant help businesses to make at the end of the day. So that's short-term decisions, question 5, that we have to be mindful of. 20% or 15, depending on how excited the examiner is. Then we come to budgeting and budgetary control because, hey, the management accountant helps the organization in preparing budgets. I mean, it's one of the fundamental roles of the management accountant. This is 15% of the syllabus, and sometimes buried in question 3 or question 2, okay? Question 3 or question 2, depending on where the examiner is. And here, we are going to be looking at methods of preparing budget, like incremental budget method, zero-based budgeting, rolling budgeting, participatory budgets, non-participatory budget, program-based budgeting. All these are methods of budgeting. Then you come to the preparation of the functional budget. So how do we prepare the sales budget, the production budget, the material purchases budget, the material usage budget, the labor cost budget, the labor usage budget? All of those functional budgets, we will be asked, or we must know how to prepare them. Then we come to the master budget. Now, the functional budget represents the budget of the various departments or key functions within the organization, whilst the master budget represents the budget of the entity as a whole. So the master budget has 3 components. That is the cash budget, the budgeted income statement, and the budgeted statement of financial position. So these 3 make up the master budget. Then certainly some behavioral aspect of budgeting that the examiner can ask us about that we need to be mindful of. So 15%, there are a lot of theories here in budgeting that you have to also be aware of, sometimes in question 2, sometimes in question 3 in the exam. But that is budgeting, 15% waiting for us in the exam. Now, we have seen sometime in the per the examiner's discretion, sometimes students go to the exam and under budgeting, there is only a 5-mark question or a 7 marks question in the exam hall. It depends on how excited the examiner is. Nonetheless, it's a significant portion of the syllabus that you have to be mindful of. Please note, the reason I'm doing this breakdown is to let you understand the scope of the syllabus, the examination, and most importantly, help you to prepare your study plan to help you plan yourself out as you are going to be doing some self-studies as you proceed in the discussion. Then the next one is standard costing and variance analysis. And so this is also going to be either question 3, because like I said, the budgeting and standard costing, sometimes you can find them in question 2, question 3, or question 3, question 2. So the positioning is not fixed like the performance measurement and short-term decision. But that is going to be there that you must be mindful of. Variance analysis, a lot of things. So we're going to be calculating various variances, because if an entity plans that it will spend $5 to produce this particular remote here, so the entity plans that it will produce this remote at $5 per unit, then at the end of the period, the entity ends up spending maybe $7.5 per unit to produce the remote. The question we need to ask ourselves is, why is that? That's an adverse variance, right? Because we wanted to spend $5 to produce the remote, but we ended up spending $7.5. So we have exceeded our plan, our budget, our expectation by $2.5. That's an adverse variance. Okay, why did that happen? Who caused that? How do we resolve that going into the future? So those issues about setting standards, recording the actual results, and then giving out the reasons for the variances and the various measures that management can put in place are important for organizational success. And so we're going to be looking at calculation of variances, interpretation of the variance, and then some various variance ratios that you have to be mindful of. A 15 marks area waiting for us in the exam hall that we need to understand. Then we come to contemporary approaches. Usually this is going to be in question 2B or question 3B or question 3B. So contemporary approaches. It's purely theory issues. Purely theory, 15%. So quite a number of the theories you're going to be seeing in the exam or sometimes comes from this particular area, contemporary issues. This is where you're going to be looking at ethics. Yes, in management accounting, we have ethics here. And it's the same as the ethics, if you have done ethics in other subjects. So objectivity, professional competence and due care, professional behavior, integrity, confidentiality, and the various issues. The same idea here in management accounting. Then some other models of evaluation like benchmarking, business process reengineering, just-in-time system, total quality management, environmental cost accounting, and those other issues that you must understand. And so what you are going to be doing is that you are going to be going ahead of me to start reading some of these theories, okay? I will come back to them later on, okay? Maybe during our revision week to talk to you about them, these theory issues. But as you are studying, you commit time, you prepare your study plan, you have to be reading these along. We have the key summary videos on each of them in the mobile application under the key summary videos that you can access. Okay, so if you don't like reading, then you can watch the video to listen to them. The reason why I'm telling you that is because time will not permit us to cover everything thoroughly. So you can start reading some of these models of evaluation issues ahead of me, because I'm going to come back to them during our revision session, and I may not cover everything there thoroughly. But there are theory issues that you have to be mindful of. Then the last part, this is question 4A, 15 marks. Question 4A is management accounting in the public sector. So yes, the management accountant's role in the public sector is also important, right? Because everything we do in the private sector, everything we've spoken about under short-term decisions, budgeting, standard costing and variance analysis, and everything else that the management accountant does in the private sector, it's also valid in the public sector. So in the public sector, how relevant is the management accountant's role? That is what is covered here. And we're going to be looking at project appraisal. So how do we appraise projects in the public sector? Now, if you have done financial management or you did some investment appraisal issues in some finance class, you would have known that projects can be appraised using net present value, accounting rate of return, internal rate of return, payback period, discounted payback period. You know those methods. But in the public sector, there are other methods that we use, like the cost benefit analysis, benefits to cost ratio, cost effectiveness analysis, cost outcome analysis, and some other methods that are exclusively used in the public sector to appraise projects. We need to be mindful of those methods. Then there are specialized or short-term decisions that are made in the public sector by public sector organizations. How do we assist these organizations to be able to make the decisions that they have to make in order to optimize profitability or returns of the organization? These are the things that you must understand about the syllabus breakdown and the examination structure of management accounting. Now, in that contemporary issue area, there are some IT issues there that you have to be mindful of. Yes, because technology is an important thing. One thing you must understand is that the syllabus now has some themes that you have to be mindful of. The theme of ethics, the theme of public sector issues. That's why you see public sector here. The theme of information technology. That's why you are seeing it here as well in the discussion. So there are some IT issues there that you need to be mindful of. And we're going to be looking at some of these as we proceed. Then certainly the issue about sustainability. Yes, there are sustainability issues still under the contemporary approaches that you have to be mindful of, like the environmental costing that I spoke about. That will be escalated a little bit to bring in sustainability, because in this day and age, the objective of the business is not just to maximize the wealth of the shareholders, but it is to run or have an organization that is socially and environmentally responsible. And so how can an organization design its operations in such a way that it obtains resources but doesn't affect the next generation's ability to have access to a safe world or safe environment? So sustainability is an important issue that we must understand when it comes to talking about management accounting. So this is the scope of the management accounting syllabus and the key issues that we must understand. So you will realize that it appears that it's not a lot, right? Just 6 topics. Okay, 6 broad topics. But the 6 broad topics have a lot of babies under them. That's the most interesting aspect. The 6 broad topics have a lot of babies under them. And we have the key summary videos covering all of these topical issues that I've spoken to you about in the mobile application. And so if you want to study ahead of us, you want to cover some topics, as I've encouraged you to do, just go under the key summary videos, learn the principles. Then you can solve some questions available in the book, as well as get access to the practice question course and get access to a lot of questions in respect of that. So you have to work hard. Time will not permit us to thoroughly cover everything in the syllabus, but we are going to be covering upward of 90% of the syllabus. Just that, as I said, time will not permit us to cover everything. And it is for this reason why you have to be mindful and make some time to study on your own as well. Okay? So that's the scope of the syllabus and then the breakdown. Any questions, you raise your hand, we'll bring you up, or you put it in the chat for me if there are any questions or comments. Okay. So we've looked at the general requirements for success. We've looked at the syllabus structure and then the scope of the examination, what we are going to be seeing in the exam hall. The next question we ask ourselves is, how do we pass the management accounting examination? And please, you see, all of these foundations that I'm laying today are crucial. These things are very important because you're going to be seeing them playing out throughout the mentorship program. So what will it take? How do you position yourself to pass the management accounting examination? To pass the management accounting examination, there are 3 key things that you have to be mindful of. Please stay with me carefully. The first one is to master this topic called cost classification. It is not directly in your management accounting syllabus, but here is the case. You have to understand that the management accounting in level 2 is a build-up of introduction to management accounting in level 1. Most of you came in with an exemption, so you didn't do management accounting in level 1. So you will not see this directly in your syllabus, but it is a fundamental topic in management accounting that you need to understand. Why? Because cost classification will help you to understand how you prepare a cost sheet for an activity, an operation, or an undertaking. How you deal with overhead analysis sheet. We'll get into all of those things. Then apportionment as well as absorption of overhead. So cost classification is a crucial topic. As a matter of fact, that is the key thing we're going to be opening up the discussion with in a moment as we get excited into the discussion. The second thing is to understand core costing techniques. And that includes absorption costing, marginal costing, and activity-based costing. Listen carefully. The short-term decisions, the 20-mark question you're going to see on the short-term decision, whatever decision the examiner brings, you are going to be using the marginal costing principles. Because all the short-term decisions are made using the marginal costing principle. So that is a crucial topic or principle or concept that is going to help you to pass the examination. Under variance analysis also, you have to call on marginal costing when it comes to calculation of overhead variances as well as sales volume variances. Then when you get to question 1, performance measurement, when we come to the concept of divisionalization and we are dealing with transfer pricing, we can be called on marginal costing. So the marginal costing stands alone on its own to prepare a profit statement. We can have a question on that. But the marginal costing principle is relevant for short-term decisions. It's relevant for variance analysis. It's relevant for performance measurement in question number 1 when we are dealing with the concept of divisionalization or transfer pricing. So that is an important thing you must understand. Absorption costing, the same thing. We can have a standalone profit statement question on its own under absorption costing, but the absorption costing is also relevant under budgeting. Then it is also relevant under performance measurement, transfer pricing. Then it is relevant under variance analysis. In other words, for you to pass the management accounting examination, whether you like it or not, you must understand the fundamental principles underlining absorption costing and marginal costing. If not, when we get to short-term decision and we are looking at something, you'll be like, where is this thing coming from? It's coming from marginal costing. Then the other one is activity-based costing. It's a crucial standalone question we can have in the exam, or the examiner has done this over and over again. In the exam, or for absorbing overhead using the activity-based costing. But that is also needed in performance measurement again when we are dealing with transfer pricing. Because sometimes under transfer pricing, the examiner can ask us to use ABC, activity-based costing, to calculate the transfer price of the entity. So as a management accounting student, to say you know management accounting, you must know everything under cost classification. To say you are a good management accounting student, you must understand these 3 concepts: absorption costing, marginal costing, activity-based costing. If you are good, the rest of the topics, it will be water. It will be simple. It will just be nice. It will be kind to you because you are just going to be crystallizing things as you build each topic up. Then certainly the final thing is going to be the mindset, essential mindset and skills. This is an English paper, so English comprehension is very important. The accurately interpret what the question demands is important. Now, I jokingly say this, that you will struggle in management accounting. In other words, if your English is not good, you're going to struggle in management accounting. Because if you read a question and the examiner says, The entity needs 500 kilograms of materials to produce a product. However, they have 300 in stock, which is constantly used by the entity and can be replaced at $2 per unit, but the 300 in stock was bought at $500 per unit. What is the relevant cost of the material we need to produce the thing? It's English. So you must have the ability to understand the English language. Then you can bring in your management accounting principles. So if you are weak in English, you're going to have challenge with management accounting. Questions, you will read the scenario and you have to have the intelligence to interpret the scenario in the context of management accounting. So English comprehension is important. Then we come to application of the principles. Okay? Application of the principles. It's not what you know, but how the principles apply. And this is a challenge for many students. And that's why I mentioned at the beginning, you have to stay focused. You must be copying notes. You must be preparing your notes. You have to be actively engaged and involved throughout the period. Because if you miss the explanation of a principle, you will see a question and struggle. That's it. Because if the explanation of the principle, you don't get it or you missed it, you can look at 10 million questions and you will still go and fail the exam. Not because the questions are difficult, but it's because when your foundations are weak, ICAG will expose you. That's the thing you must understand. So that is what you must be aware of. If the foundation is weak, ICAG will expose you. So application is key. Then the last one is speed and accuracy. Listen, time will be your enemy in the exam hall, especially for management accounting. Yeah, time is going to be your enemy in all the papers, but management accounting sometimes have that challenge. Time will be your enemy. So speed and accuracy is crucial. What does that mean? It is not in the exam hall on the 2nd of November, all other things being equal, that is where you are going to be doing speed and accuracy, Darby. Throughout these 12 weeks, you have to be working on speed and accuracy. And nuntina, you have to be active preparing your notes. And nuntina, when we are solving questions, you have to grab your calculator and be punching alongside as we go. And nuntina, you cannot sit there and be looking at us like we are Teletubbies or showing something. You have to be present here. Because speed and accuracy is something you work on before the exam date, not in the exam hall. So sometimes people fail the exam, not because they don't know, but because time was not on their side. By the time they realize, get ready to stop work, they have answered only 3 questions. You have failed the exam. Because answering only 3 questions in the 3-hour period, because you are not able to work with speed and accuracy, 99.9% of the time, you're going to fail the exam. Because that's a lesser chance that you are giving yourself to pass the exam. So what am I saying? If you want to pass this examination, you want to be the best at the end of the day. Not just, the pass mark is 50%. So I just need to answer 3 questions. No, if you go with that mindset, you will fail. You have to challenge yourself and tell yourself, I want to be the overall best student. I want to get 80 or 90%. Why is that important? Because you see, you need to challenge yourself higher so that when you are falling, you will fall, but you will still be in the pass range. So if you challenge your mind from day one and say, management accounting, I am challenging myself. I want to get 85. That means you have to work hard for 85. So that if you are falling from 85, even if you come to 65, that is, you are falling by 20, you have still passed the exam and you are good. But if you come to the exam, or you come to the ICA and you are like, oh, the pass mark is 50%. Hey, me there, I just want to pass the exam and go away. Oh. I don't like any award. I don't like anything. Okay, I just want to pass the exam and go away. It means your target is 50%. When you are falling from 50, you have failed the exam. And that's why sometimes people go to the exam hall and they come out with 3%, 5%, 15%. Ask yourself, how can someone go to the exam hall and come with 7%, 10%? And that's why sometimes you see people, oh, this exam, the way I wrote spy, if they show you your script, like we show. So you have to work at it every week for the next 12 weeks so that 3 hours becomes a normal time for you. That is why assignments will be given. And so when assignments are given, you challenge yourself, work them under time. That is where we're going to be doing performance evaluation test. When it is done, challenge yourself and do it. If you can do that, I can guarantee you, you will walk into the exam hall, write the exam with confidence, and most importantly, pass the examination. That is what you must understand. And that is what management accounting is all about. That's it. So we have seen what it takes to pass. We've looked at the syllabus structure and the exam. And then we've looked at the core areas to focus on: cost classification, the costing techniques, and then the mindset that you need to pass the examination. If you can do this, you are halfway. 1/5 of yours is already in the pass area. Now you got to work hard to drag the other feet so you can cross and become successful in management accounting. So that's it about that. And these are our introductory discussions on management accounting. Any questions, you raise your hand, we'll bring you up, or you put it in the chat for me. Okay. So let's begin the journey on management accounting. So, introduction to management accounting. In this introduction, I am taking you to what I mentioned here about cost classification. And it's going to set the tone for us the rest of the session today and possibly the whole of next week's session. We are going to be looking at those fundamental principles and topics which we can have as a standalone question in the exam hall, as well as the principles being crucial for us in other topics that we are going to be doing as we proceed. So in my introduction to management accounting, we are going back to the basics, get the fundamentals right, and then build on it. Because if the foundation is solid, then we can build a very, luxurious property on it, and then boom, we can become successful. So management accounting, I'm coming in from the book on page 14 of the book for some few things. As I mentioned, management accounting is a build-up of cost accounting, right? So for those of you who did costing in high school, like you've done cost accounting in high school, right? Or you did some cost accounting in your first degree. So that's the introductory area. So we're going to take some one-liner definitions to set the tone up for us as we proceed in the discussion. So what is cost accounting? In a simple language, cost accounting is the process of accounting for the cost at which expenditure is incurred or committed to establish its ultimate relationship with cost centers and cost unit. So at the end of the day, like I gave an example earlier, we want to manufacture this remote. And we are going to spend $500 per remote. Okay, so that's the cost of the remote. Okay, so the amount of expenditure incurred on an activity, a process, or an undertaking is the cost. The recording of that cost and analyzing of that cost is what set the tone for us in the cost accounting. So what are the objectives in cost accounting? One is cost ascertainment. Like I said, cost ascertainment simply is the determination of the cost of an activity, a process, or an undertaking. So let's say that a musician come to us, all right, that, hey, organize an event for us at the Independence Square or at the Accra Sports Stadium. Okay. How much will it cost us to organize that event for them? That is cost ascertainment. Or it is the birthday of Francis. And Francis comes to us and say, hey, I want branded, and we are a manufacturing company. We produce water and chocolate and others. And Francis comes and say, it's my birthday. It's a milestone in my life. So I want branded water and branded chocolates to give to people when they visit or they come to my birthday party. Okay. How do we determine how much cost we're going to incur for each of the things that Francis is ordering? That is called cost ascertainment. So it is the management accountant that helps the organization to determine the cost of an activity, a process, or an undertaking. The second objective is cost control. Now, I needed to be careful here because cost control and cost reduction, sometimes students interchange them. Cost control is simply the comparison of the actual cost with the standard or the budget to get variance. So as I mentioned earlier, this remote, we expect that we will spend $10 per unit. But when we began production, we are now spending $12.5. So when we compare the budget, it was 10 to the actual cost 12.5, we are now spending $2.5 more. What must we do to ensure that we bring the actual cost back to the original budget, or if the original budget has a problem, we revise it to reflect the actual situation at present or at play? The process of comparing the actual cost with the budget is what we call cost control. So that if we are going beyond the budget, what happened? Maybe we spent 12.5 because we employed low-skilled labor staff or a lower grade of labor in the organization. So they wasted more time on the product and we paid them more, and they wasted a lot of material, so we had to buy double of the material. Okay, so if that is the case, now let's employ qualified people. Maybe let's leverage technology and move from a labor-intensive production system to a capital-intensive productive system. That way, we can control our cost so we can maximize our profit as an organization. Cost reduction, on the other hand, so cost control is something that is done regularly. All right? Cost control is done regularly. So every now and then, it could be quarterly, it could be monthly, it could be semi-annually. It's done regularly by the entity. That's one thing we must understand about cost control. Cost reduction, on the other hand, refers to the real and permanent reduction in the unit cost of goods manufactured and services rendered without affecting the intended use. And this is seldomly done. In other words, it's done as and when there is an opportunity. So here's the play. We estimated that we would spend $10 per unit to manufacture this remote. That was our estimation. The reason we did that estimation was because we thought the materials we would need to manufacture this remote, we'll buy them at $5 per kilogram. So that was our budget. So as time goes on, we receive a call from our supplier that they are doing, don't call me, oh, don't call me. Or there is a new supplier that is offering the same component at $3.5 per unit, per kilogram. Okay. Remember, we thought we would buy it at 5 per kilogram. Now we are getting a reduced price at 3.5. So what do? Quickly, we can buy more because remember, it is not that we are buying a cheaper material to affect our cost, the quality of our product. So if the quality cannot be compromised and we can leverage that opportunity to reduce our cost, that is the concept of cost reduction. So the cost reduction only comes in as and when an opportunity presents itself that the entity identifies that it can leverage to reduce the unit cost of the product. So whilst cost control is done regularly, cost reduction is done as and when the opportunity rises. That is the difference between cost control and cost reduction. And all these are in the hand of the management accountant. So that's the third thing. Cost ascertainment, determining the cost of an activity, operation, or undertaking. Cost control, comparing the actual cost with the budget in order to analyze variances and keep costs at the levels required. Cost reduction, identifying opportunities that will reduce the unit cost of a product without affecting the quality of the product. 4, fixing of selling prices. Because if we ascertain the cost, if I go back to my example, event, somebody is coming, say, hey, organize an event for me at the Accra Sports Stadium or at the Independence Square. So management accountant, how much you will charge the person? Cost estimation, it will come in. Mostly we are going to be using relevant costing. We'll come back to that later. And so pay the relevant costing, we say that, okay, it will cost us $100,000 to organize the event. Okay. So how much should we charge the artist? You know, we are not doing this job for free. So we have to put a markup on it, right? So maybe our markup is 15%. So we'll charge the artist $115,000. So that $115,000 becomes the invoice price, becomes the quoted price, becomes the selling price. That is the job of the management accountant. Then certainly providing information for framing business policy. Remember the example I gave earlier about the remote, that we wanted to spend $10 per unit, but we ended up spending $12.5. And the reason we spent that extra $2.5 was because we employed a lower grade of labor who worked more hours and we had to pay them and wasted more materials. Now, that information can be extracted by the management accountant. That now is given to management. So management would then stand and introduce a policy that, hey, we will only employ labor of a certain grade to ensure that they work within time and we save cost. Number 2, maybe we will have to shift from pure labor intensive to some capital intensive. So those are policy decisions that management makes. The management accountant provides the management with these policy decisions roles to help management to make the various decisions that they have to make. These are, if you want, the objectives of management accounting. And throughout the syllabus and our discussion in management accounting, it is either we are going to be estimating cost, we are going to be controlling cost, we are going to be finding ways to reduce cost, we may be fixing prices for activities, process, or undertaking, or we will be helping management to make decisions. And these are the behavioral aspects that you have to be mindful of. So those are the objectives of management cost accounting. And so the build-up from there takes us into, okay, let me talk about this quickly, the limitations. So if you check carefully, there is this argument, okay, the law requires that, the Companies Act requires that companies have accountants. right? Prepare financial statements. So they must have accountants. And so there's an argument that, okay, in that case, companies do not need management accountants. They need financial accountants to prepare financial statements. But if you look at the discussions we've had, the management accountant must be in the position to do that. And this cuts across industries, sectors. Okay? The management accountant should be able to do that. So, for instance, a bank, when you go to the bank, one of the things they do is they will charge you for various things. Maybe you are coming for a loan. They have to go and inspect your collateral facility. They're going to charge you for that. Who determines how much the bank should charge customers? That's the role of the management accountant, to help the risk analyst of the company to be able to then make the various estimation. So the management accountant's role become an integral part of the organization. Not only that, the management accountant's role is also integrated into various functions within the organization. Because how much should we sell our product? Sales and marketing department are going to say, okay, let's sell the product at $2 per unit. But before that price can go ahead, we must know the cost we are incurring to produce it. So if the selling and distribution department price the product lower than the cost we incur, then the company will be run to the ground because we will make losses. Same thing happens to the procurement department. When procurement department is buying goods, inventory, stocks, how much must we pay? How do we control those stock levels? It's not the procurement officer that is going to do that alone. The management accountant must be there to help to do that. Human resource department, okay, we need these skills, we need these people, we need these people. How much can we pay them? And how will that affect the total cost of our company and the profitability of the company? It is the management accountant who can do that. And so the management accountant's role is not like, oh, it's just sitting one corner and that is all. No. In this day and age, the role of the management accountant is integrated throughout every function within the organization. So you are not just there as bosu in one corner. No. Your role is now elevated and integrated to other parts of the organization. Even policy formulation at the board level, the management accountant plays a crucial role in determining the strategic policies, objectives that the organization must pursue to enhance profitability and, most importantly, maximize the wealth of the shareholders. But in as much as all these are great, there are a couple of limitations that you have to be mindful of as management accountants. The first one is that it is based on estimation, like the cost ascertainment. Like the example I gave a moment ago that, hey, an artist wants us to organize an event and we have estimated that it will cost us $100,000. That's an estimation. What if the actual situation, it costs us more than that? So that's the limitation there that we need to be mindful of. Number two is no uniform procedure in cost accounting. That's the one thing. Unlike financial accounting, financial reporting, where we have pro forma of financial statement, the standard, there is a way. In management accounting, a lot of things can be presented differently as far as the presentation is reasonably understood and the end result is acceptable. And that is a limitation sometimes. 3, large number of conventions and estimates. And we're going to be getting into this in a moment because we will be using a lot of assumptions in management accounting. And those assumptions could be misleading, could be confusing, but we have to use them to rationalize the decisions we want to make. For instance, this specialized decision like this, if there are some chairs that we are going to be using, so we own some of the chairs to be used to organize the event. And on the day of the event, nobody is going to rent the chair from us. Based on relevant cost principle, we will not add any cost of the chair when estimating how much we will charge the artist. Is it reasonable? Take it again, because I want you to think about it closely. We are an event organizing company. We have some chairs that we will use for the event that the artist has asked us to organize for them. On the day of the event, nobody will rent the chair from us. So we will have no option than to use the chairs for the event. In relevant costing environment, we wouldn't apportion any cost, any amount associated with the chair to estimating how much we will charge the artist. However, if on the day of the event, some people will come and rent the chair from us, and we would have received some money, then because we will not rent out the chair, the money we've lost, we have to charge it to the artist. And that is the concept of opportunity cost. So and we're going to be getting into some of these things later on. So there are a number of conventions that we are going to be using, and sometimes it's a bit interesting. Are you getting it? It's a bit interesting. 4, formalities are more. So many formalities are to be observed to maintain the benefits of cost accounting. Very important. It's expensive. I mean, because we're going to prepare budgets, we're going to do estimates, and various other issues that we must understand. So these are some limitations of cost accounting. I'm seeing a question coming up. Sorry, let's see what we have here. From Francis. Please say, is management accountant and cost accountant role the same? In theory, yes, but in principle, no. The cost accountant is a lower grade to the management accountant. Okay, so you want to see the cost accountant as the subordinate of the management accountant. So the management accountant is the boss. The cost accountant works below the management accountant. The reason is that the cost accountant is going to be doing the fundamental issues. Then the management accountant will sit at the top to use those fundamental issues to even provide a more summarized statements, policy directions for management to use. So in theory, they are doing the same thing. But in principle, the management accountant is the boss, the cost accountant is the subordinate. Do you get the idea? But they all do the same thing in theory. That's the idea there. That's coming from Francis. So that's what you must understand. So let's come to management accounting and bring our discussion home. What then is management accounting? SEMA gives a one-liner definition for management accounting, and then the objectives are similar to what we have spoken about. So I'm not going to go into this again, and you can read that because, as I said, management accounting is just a build-up of the cost accounting. And so in that case, there are some key terminologies and concepts that we have to be mindful of as we begin the journey. So terminologies in management accounting that we need to be mindful of as we expand on the discussion here. So what are these terminologies? You might have heard them before, so they're going to be pretty easy for you here. We've already defined what cost is, right? The amount of expenditure spent on an activity, a process, or an undertaking. But what is a cost center? Please, these are one-liner definition the examiner can ask you in the exam, or he has done them in multiple examination dates. Like the examiner will just ask you to write short notes on the following or explain the following. So you have to understand them very well at the end of the day. So what is a cost center? Pay attention. I'm going to use a number of examples to drive the point home. So a hospital, the labor ward at the hospital, and then the bed in the labor ward at the hospital. Then I'm going to use a hotel. Each room at the hotel or let me go this way. So a manufacturing company. Products. And then units. One thing you must understand is that everything we are learning is applicable to various industries. Please pay attention carefully. So you go to the exam hall and you can see a question on a restaurant, on a school, on a hospital, on an NGO, or whatever. So whatever we are learning is applicable to all sectors. So don't just close your mind and say, oh, management accountants, they are needed in manufacturing companies. That's why I gave you example of the bank. Management accountants are needed in all sectors, all industries. So, one, cost center. A cost center is simply a location or a function, a department, a group of machines to which cost can be attributed. To which cost can be attributed. So when we go to a hospital, the labor ward at the hospital can be regarded as a cost center. Why? Because the hospital can determine how much money they spend for the labor ward. The cost they incurred for the whole labor ward. That is a cost center. If it is a manufacturing company, then the factory line can be regarded as a cost center. Why? Because at the factory, we will be able to know, oh, okay, these are the costs we are incurring at the factory, or if you want, at the production department in the manufacturing company. So that is a cost center. A location, a function, a group of people, an item of equipment, or a department within an organization to which cost may be ascertained. Stay with me. The next terminology is cost unit. Cost unit is simply the quantitative unit of a product to which cost may be ascertained. Stay with me. So if we go back to the hospital, the labor ward is a cost center. Each bed at the labor ward is a cost unit. So the whole labor ward is a cost center. How much cost do we incur on each bed becomes what? The cost unit. If we go to the manufacturing environment, the factory is a cost center. The product they are producing is the cost unit. Okay? The products they are producing is the cost unit. That's what we must understand. So that is cost center and cost unit. Then the next one is what is called unit cost. What is unit cost? Just listen to the name, unit cost. You can see the cost unit cost is like transposition of words. But unit cost is simply the cost of a single unit of output. The cost of a single unit of output. So if the manufacturing company is manufacturing whatever tables, then the cost per unit of table is $10. So how much cost do we incur in the production of a single unit of output? That is the cost unit. The product we are producing, the quantitative unit of the product is cost unit. The cost we incur per unit is unit cost. The factory manufacturing the product is cost center. We are going to be needing these. So now if you hear, oh, a cost unit, you should know what it is. A cost center, you should know what it is. Then we come to revenue center. Their names will help you. A revenue center is simply a department in an organization responsible for generating revenue, like the sales department. So, for instance, if you go to the hospital, you will realize that they will say, "Oh, go and pay here." Then you go somewhere. It's just a small shop, a small store there. Maybe they have a single air condition and a fan. Then one individual or two people are sitting there, and their responsibility is taking money, taking money, taking money. It is called revenue center. Now, does it mean they don't incur any cost? They do. But if you look at the revenue they generate and the cost they incur to run that department, it's it's not any reasonable amount, because the cost can be 0.1% of the revenue. So that's why we pretend as though they don't incur any cost. So we call them revenue centers, because the people working there must be paid. The air conditioning must be paid for. The electricity will be paid for, right? But imagine they are generating revenue of, say, $10 million, and the cost of running that place is just maybe $10,000. So the cost is not proportional, like it's not in proportion to anything. So that is revenue center. Then we come to profit center. Okay, what is profit? Revenue minus cost. So a profit center is a department within an organization that generates its own revenue and incurs cost. So the whole business can be regarded as a profit center. Why? Because we incur cost and we generate revenue. That's a profit center. Then the last terminology is the revenue center. There's a question coming up. Lucky said, "Sir, please, revenue center the same as revenue point?" Yes, largely is the same thing. Revenue point, largely the same thing. So the point at which revenue is collected by the entity, just that there is a little expansion, if you want, that we can give at the end of the day. So yes, on the overall, where do we pay money? Where do we collect money? That's a revenue point. That's a revenue center. That's all. But there is another thought process under the term revenue point, which can be expanded. And that means that, okay, at what point in the supply chain does the entity recognize revenue? That becomes the revenue point. So for, KG2 understanding, they will be the same. But we can expand the thoughts on revenue point in other fields of studies, in other areas of study, to say, okay, at what point is it that when somebody comes to the hospital, let's say we're in the hospital, that we recognize revenue, or at what point do we recognize revenue? So the point at which in the production and sales stage that revenue is recognized will be the revenue point. So that is an escalation of the thought. But in theory, it could be regarded as the same idea in respect of that. But to be in the safe zone in management accounting, we stay with a revenue center. Do you get the idea? Because it is where we collect revenue and sort of incur no cost at the end of the day. Lucky. So that is the idea in respect of that. The last point is investment center. Listen to the name. Now, investment center is a department, a division within the organization that generates revenue, incur cost, and also make investment decisions. And we'll come back to this concept under question 1, performance measurement, later. That will be the last but one topic we're going to be looking at. So let me give you an example of what's happening here. So let's say we have a bank. Okay, let's say we have a bank. And the bank has branches. So they have branches in Accra, they have branches in Tamale, they have branches in Kumasi. Okay. So the head office in Accra certainly can be regarded as an investment center, right? Because they incur cost, generate revenue, and make investment decisions. Please stay with me carefully. But the branches in Tamale and Kumasi, if they want to make any investment decision, buy a new car, buy a new software, whatever it is for the division or for the branch, they have to write to HQ to get clearance for it. That then means that those branches in Tamale and Kumasi are profit centers. Do you understand it? They are profit centers. However, let's say we have another branch at Hohoe, but the branch at Hohoe, they can make investment decisions up to, say, 10 million Ghana cedis. They don't need any approval from the head office. So if they want to buy a new vehicle for the branch, they can buy. Now, that means the branch at Hohoe is regarded as an investment center. Why? Because not only are they generating revenue, incurring cost, they can also make investment decisions on their own. That is the difference between investment center and profit center. And these are key terminologies that you have to be mindful of as a management accounting student. Any other questions? So we are going to be referring to these throughout. So you don't have to forget them. You have to put them in your kotoje. You have to use them as your walking stick because you will be needing them throughout the discussion. So those are the key terminologies that you have to be mindful of. Okay. So those are the few things we must understand about what this whole course is about in respect of management accounting, the objectives of management accounting, the limitations of management accounting, and then these key terminologies. Let's get excited and go into cost classification. Please stay with me carefully because we are beginning to get into areas where the water is going to get or have a higher current. And so you have to have the ability to be able to swim in the ocean with us. And it's going to be interesting, I promise you. So cost classification. Remember we said the amount of expenditure we incur on an activity, a process, or an undertaking is cost. So if I say that this remote cost us 10 Ghana cedi per unit, that is the cost we are incurring. But how did we reach that 10 Ghana cedi per unit? That is where cost classification comes in. And so for one-liner definitions, I'm coming in from the book, page 25 of the book. Cost classification refers to the process of grouping costs according to their characteristics. The process of grouping costs according to their characteristics. Now, there are various bases of cost classification. All right, basis of cost classification. We can classify costs according to nature. We can classify costs according to behavior. We can classify costs according to function. We can classify costs according to normality. Controllability. We can classify costs as to whether they are production related or not. So there are a lot of cost classifications. But our area of focus will be the first two, nature and behavior. But before I come there, when we say classification of cost according to function, it is the classification of cost according to the various departments within the organization. That's classification of cost according to function. And so within the organization, how much cost did the production department incur? How much cost did the finance and admin department incur? How much cost did the selling and distribution department incur? How much cost did the HR incur? So of the 10 Ghana cedi per unit, how much relates to each of these departments within the organization? That is the classification of cost according to function. That's the idea. That's the first thing you must understand. Number two, classification of cost according to controllability. And so we have what we call controllable cost and non-controllable cost. Controllable cost and non-controllable cost. Their names will help you. When we say a cost is controllable, it means that cost can be influenced by the decision of a key management personnel. Let's take that again. A cost is controllable if that cost can be influenced by the decision of a key management personnel. That is a controllable cost. A non-controllable cost, on the other hand, is a cost that the key management personnel does not have power over how much to be spent. So that is the second way cost can be classified. Controllable cost, non-controllable cost. So if the cost can be influenced, so for instance, let's say that we are manufacturing desks. Okay. The production manager or the organization, the production manager can decide whether to use plywood, to use industry pressed wood, wawa, odum, sapele, or whatever. So they can determine the quality of the wood to use. Now, the quality of the wood or the type of the wood to use determine the cost to be incurred. So that is a controllable cost. So the cost of the wood will be a controllable cost. But the production manager is not going to be thinking about how much we have to pay to bring in the wood to the factory, because that is not something you really have control over, right? Because so you go to timber markets or you go to the place where they sell these woods or these whatever the heck, and then you buy them. You buy them, you have to now, that is called carriage inwards. So you have to pay for TNT for it to be brought to your office. You don't have control over that. So that is uncontrollable cost. And usually one thing you must understand is that controllable costs are huge in nature. They represent a significant portion of the cost. But non-controllable costs are just a small proportion of the total cost. So that is the second basis of cost classification, controllability. Third, costs can be classified as to whether they are production-related cost or non-production cost. So we have production cost and non-production cost. So we will spend in total 10 Ghana cedis per unit to manufacture the remote. Okay. Of that 10 Ghana cedi per unit, how much is the factory responsible for? How much is the finance department? So that the cost incurred by finance, selling and distribution, HR, do not relate directly to the cost of the manufacturing of the product or to the production of the product. So those will be non-production cost. So the production cost will be then the material, the labor, and the cost we incur in the factory. So that is the third basis of classification of cost. Production cost, these are costs that relate directly to the production of the goods, works, or services. Non-production cost, these are costs that have no relationship with the production of the cost. So they are costs that are incurred by other departments or functions within the organization other than the production or factory department. These are theory issues the examiner can ask you, but the discussions are also crucial for us throughout the syllabus. So these are the three things we must understand. Classification of cost according to function, classification of cost according to controllability, classification of cost according to production. But as I mentioned, we're going to get a lot of goosebumps on the first two. Classification of cost according to nature and classification of cost according to behavior, because they are going to drive us throughout the syllabus as we build our story. So let's come first to classification of cost according to nature. Stay with me carefully. Classification of cost according to nature is the classification of cost according to the elements of cost. So I'm going to make this interestingly simple for you so you understand. Let's say we are a furniture manufacturing company. So furniture manufacturing company. And so we are manufacturing some desks. Listen carefully. And then each desk costs us, so cost per desk is 120 Ghana cedis. So that's the cost per desk, 120 Ghana cedis. Stay with me. Classification of cost according to nature is classifying the cost according to the elements of cost. So this 120 Ghana cedis has three key elements: material related cost, labor related cost, and expenses. Stay with me. The material cost represents the cost of the ingredients, not ingredients for okra stew, banku and okra stew, but the cost of the inputs, the cost of the ingredient, the cost of the raw material, okay, used in the production of the desk. So if we are manufacturing a desk, what do we need? We need a wood. Okay, what do we need? We need a what else do we need? We need nails for the decks. We need glue. Okay. We need, decks, they put a certain formica. It's not formica board, but permit me to call it formica board. Okay, that smooth thing they put on the surface of the deck so that on the wood. Okay, so they use the glue, then they put that smooth thing on it. I don't know what the name that is. Maybe you can tell me if you know. But like a formica board or whatever. Then, so we have the wood, we have the nails, we have the glue, we have the formica board on the surface of it. What else do we need? I don't know. Maybe some other materials we need. Others. So the cost we incur on these things are material cost. So that's the first element of our 120 Ghana cedis per desk. Second is labor cost. Think of labor cost as the cost of human effort used in the production of goods and services. The cost of human effort used in the production of goods and services. So in our manufacturing environment, our labor cost will relate to the carpenters that we're going to be using. Okay? And they are apprentices that will be there. And maybe some people are, doing national service with us, and we have to give them some stipends. So national service personnel within the organization that we have to pay. So the money we pay to the carpenter, the apprentices, the national service personnel, the allowances we give them will be labor cost. That's the second element. Then the third thing is expenses. What are expenses? Expenses are all other costs apart from material cost and labor cost incurred in the production of goods, works, and services. That's it. That's it. So what does that mean? It means that if we rented a special machine, So hire of special machine will be an expense. Okay, so maybe the decks, it need to have some design on it. And so we need to go and rent that machine so that we can carve the decks or have the design on it. That is an expense. Or maybe we need to employ a DEX specialist. So hire of DEX specialist. You know, there are a lot of specialized skills in the world. We hire a DEX specialist. Now, this person will come to check the quality of the decks that we have manufactured. And that person must certify it before we can go ahead and sell it. The money we pay that person is not labor cost. It's part of expenses. Okay? Carriage inwards. Like we mentioned, the money we pay to bring in the woods or the materials that we've bought, okay? Electricity bill and others. All those are expenses. This is classification of cost according to nature. And that is classification of cost according to the elements of cost. Material cost, the cost of ingredients, inputs used in the production of goods and services. Labor cost, the cost that we incur on the human effort used in the production of goods and services. Expenses, all other costs apart from material and labor incurred in the production of goods, works, and services. But here is the play. These costs can further be divided into direct costs and indirect costs. Stay with me, because this is where we are going to see a 10 marks question that the examiner can bring to us in the exam hall and a core principle that will run through the syllabus. So the three elements of cost can further be divided into two, called direct cost and indirect cost. So the question we ask ourselves is, what's the difference between direct cost and indirect cost? We go this way. Direct cost can be traced or allocated to a particular cost center or cost unit. Indirect cost cannot be traced or allocated to a particular cost center or cost unit. That's the first distinction. So tell me, if you look at a DEX, what do you see? So we are building on our DEX example. So in our DEX example, what will be the direct material cost? What will be the indirect material cost? Direct costs are costs that can be traced or allocated to a particular cost center or cost unit. So if we look at a DEX, yes, all these are material costs, but which ones can we trace significantly? The second thing is that direct cost represents a greater percentage of the total cost, whilst indirect cost represents a marginal proportion of the total cost. Third, direct costs are controllable. We've spoken about controllability. Indirect costs are non-controllable. So stay with me. Number one, direct costs can be traced. Indirect costs cannot be traced. Number two, direct costs represent a greater proportion of the total cost, whilst indirect costs represent a smaller proportion of the total cost. Number three, direct costs are controllable, meaning they can be influenced by the decision of a key management personnel. Indirect costs cannot be influenced, so they are non-controllable. That's the first three. So on the basis of that, when you see a DEX, what do you see? The wood can be a direct cost. Give me a sec. Let me pick a black ink. Can be an indirect cost. The formica board on the surface, you can see it. It's a direct cost. The glue may not be that significant or may not be that expensive. So the glue can be an indirect material cost. Labor. The money we pay to the carpenters will be direct labor cost. But the money we pay to the apprentices and the allowances we give to the national service personnel can be regarded as indirect labor cost. Why? Because the apprentices and the national service personnel can do other jobs other than building the furniture. But the carpenters, their work can be traced directly to the finished product, the furniture. And nuntina, the money we pay the carpenters will be regarded as direct labor cost, but the money we pay the apprentices and the national service personnel will be seen as indirect labor cost, because those people will be doing other tasks other than focusing on manufacturing or building the desk. Are you following the picture? Expenses. The special machine that we hired to check the quality or to carve the decks can be traced to the decks. So the hire of special machine is a direct expenses. The hire of the decks specialist, his job is to come and see the finished decks and certify it. So the hire of the special machine, the hire of or the payment we give to a deck specialist, those two costs will be regarded as direct expenses. Then the electricity, carriaging ward, depreciation, those guys will be regarded as indirect expenses. That is the difference between direct material cost, indirect material cost, direct labor cost, indirect labor cost, direct expenses, indirect expenses. Any questions, you raise your hand, we'll bring you up, or you put it in the chat for me. You see, that is very nice. But I gave you 3 distinctions between direct cost and indirect cost. But that's not all. The fourth thing is that the summation of all direct costs gives us prime cost. But the summation of indirect cost gives us overhead. Okay? If this is the first time, don't think it's not overhead, the one that cars or human being pass on. In management accounting, the indirect cost, when you add all of them together, they are referred to as what? Overheads. So, summation of all direct costs gives us prime cost. So, if you are asked, what is prime cost? Prime cost is the addition of direct material, direct labor, and direct expenses. Okay, what are overheads? Overheads are indirect expenses incurred in an activity on operational undertaking. Easy peasy. So that is another distinction. Summation of direct cost gives us prime cost. Summation of indirect cost gives us overheads. Said the carriaging was sometimes, can't it be a direct expense in case it is budgeted? Not really. I mean, there are other expenses. You are incurring that cost because you are carrying the material to come to the factory, but it is not a material cost. Do you get the idea? So that's why it's called indirect material cost. That will be indirect expenses. It's another expense that you are incurring, but it doesn't find itself in the finished product. When someone comes and we are talking about the decks that we have manufactured, you're not going to be telling them about, oh, I went to the market and I bought the thing from Dodowa and I had to pay for car for them to bring it to Accra. So it's a cost you are incurring. It is an expenses you are incurring, but it is an indirect expenses. It cannot be direct. Whether you budget for it or not, it is an indirect expenses because it cannot be traced at the end of the day to a particular cost center or cost unit. Sounds good. That's from Francis. That is why it's an indirect expense. So regardless, whether we budgeted for it or not, it is still an indirect expenses. It is this discussion that gives us our first concept, that is the preparation of the cost sheet or the cost card. So I'm coming in from the book, page 31, the pro forma of the cost sheet or the cost card. This is Management Accounting 101. As a management accounting student, you must know this offhand. Because we can have it as a standalone 10-mark question for us to prepare a cost sheet or a cost card, or have it coming up as another principle in another topic. So what is the cost sheet? First, we bring all the direct costs. So you see direct material, direct labor, direct expenses. As we mentioned a moment ago, summation of all direct costs gives us prime cost. I'm going to come back to the concept of marginal cost and variable cost in a moment, though. But you're going to add factory overheads. The factory overheads, we will have variable factory overheads and fixed factory overheads. But we will add factory overheads. I'll come back to the separation in a moment. Then we get the production or factory cost. So follow the process. Production or factory cost is your prime cost plus factory overheads. From factory overheads, we come to non-production overheads. Because remember we said cost can be classified according to production cost and non-production cost. So we are looking at total cost. So now that we get production or factory costs, what are the non-production overheads? And that could be admin overheads, selling and distribution overheads. Then we will get total cost. So the total cost of a product is the prime cost plus factory overheads plus non-production overheads. That gives us total cost. Once we get the total cost, we are looking for selling price. So we need to add a markup or margin. Then we'll get a selling price. I believe at this point, you know the difference between markup and margin, right? Nobody is oblivious of it. Markup is represented on the cost. Margin is represented on sales. What does that mean? It means that if we are told that, oh, an entity makes a markup of 20%, it simply means that you will take the cost. Let's say the cost is $100. So we add a profit markup of 20%. That will be 20, so that the selling price becomes $120. Sounds good? So markup is on cost. Margin is on sales. So if we are told that the entity makes a margin of 25%, that means the profit is going to be the selling price minus times the margin given. So let's say the selling price is $100 times the margin of 25%. It means the profit here is going to be $25. So markup is on cost, margin is on sales. Here is the play. It is not always that you have it straight like that. So sometimes the examiner will do something. So the examiner will say markup. Okay? The examiner will say markup, but what you have is sales. Or the examiner will say margin, but what you have is cost. So there is a mismatch. So how do you move from markup to margin, or how do you move from margin to markup? If we are told that, oh, the entity makes a margin, a profit margin of 25%. Okay. Determine the selling price. What do we do? What do we do? Margin, but you have cost. So what do you do? So there are two ways to go about it, the KG2 approach and the professional approach. I will teach you the two. You decide which one you want. So let's look at the KG2 concept. In KG2, you learned that selling price equals, in KG2, you learned that profit equals selling price minus cost. The profit we don't know because it's this profit margin. So anything we don't know, we represent it by X. Margin is on sales. So we'll say 0.25X equals X minus the cost. So I'm going to assume that our cost here is $1,000. So the selling price we don't know represent by X, right? So you make X the subject. So you group like terms. You did this in KG2. 1,000 X minus 0.25X. So you make X the subject. So that becomes 1,000 equals 0.75X. So X, which is your selling price, becomes 1,000 over 0.75. What do we have? 1,000, 0.75, and that's 1,333. So your selling price becomes 1,333. So in that case, your profit is 333. This is KG2. So you are told that the company makes a margin of 25%, but what you have at the moment is cost, because from your cost sheet, you have now calculated and you have reached total cost. So that's what you have. But the question says a margin of 25%. So how do you go about it? KG2 approach. This is the presentation. In the professional environment, you will just go straight up in the discussion when you have margin. So the profit will be the margin divided by 100 plus the margin times the cost. And that is going to be, no, give me a sec. Minus the margin rather, not plus. In cost, we subtract. In sales, we rather add. So that's going to be 25 over 100 minus 25 times 100. If you do the workings, you should get a profit of 333. So you decide, do you like professional environment or you like KG2? Which one do you like? You choose your choice. It is not about which one is simple. It's about which one can you remember easily. Which one are you comfortable with? That's the beauty of management accounting. There are a number of things that we are going to be presented in different ways. It's not about which one is the fastest. It's about which one do you understand? Which one can you flow with? Which one makes you comfortable? That's the idea there. Okay? That's the idea. So this is margin, but you have cost. So what if you have markup, but what you have is selling price? What do? The reverse of the two. Okay? No problemo. So let's say we have markup of 30%, but markup, what we have rather is the sales. So let's say the sales is $12,000. Okay. As always, KG2. In KG2, profit equals selling price minus cost. Stay with me. Markup is on cost and you don't know the cost. So your profit is X, selling price is 12,000. Your cost will be, your profit is 0.3X. Then your cost is going to be X. So you group like terms, right? So it becomes 0.3X plus X equals $12,000. Okay? So you have 1.3X equals $12,000. So that X, which is your cost, will become 12,000 divided by 1.3. 12,000 divided by 1.3, what do I have? 9,231 dollars. So my profit will then be the difference, 12,000 minus 9,231. Okay? Which is 2769. So that is KG2 environment. You are giving markup, but you don't have cost. What you have is sales value. So how do you calculate the cost? So you can know the profit. How do you calculate the cost? So you can know the profit. In the professional environment, your profit will be equal to the markup over 100 plus the markup times the selling price. So it's going to be 30 over 130 times 12,000. If you do the calculation, it should give you 2769. So again, you decide. You flow with the professional environment or you're going to go with KG2. That is the concept of markup and margin. It's not difficult. Again, these are all baby steps, so because they may be needed in a whole 50-mark question. And if you miss the application, that could cost you about half of that 50-mark question. Because if in a given question, the question says you should calculate the selling price of the entity and the profit for the entity, and you are giving markup, but you have the sales, based on the structuring of the question, then you got to be careful. That is our cost sheet. Very sweet, simple, straight to the point. And that is classification of cost according to nature. 3 elements of cost divided into 2, direct cost and indirect cost, brought together into preparation of the cost card or the cost sheet. So you can have a question where you're supposed to calculate the cost sheet for a job, an activity, or a process for 10 marks. Or the principles we've discussed are going to be valid later on under short-term decisions or under budgeting or under performance measurement. So you will need it in the exam hall regardless. That's classification of cost according to nature. So we have looked at classification of cost according to function. That is classifying the cost based on the department incurring the cost. Classification of cost according to controllability. So controllable cost, can the cost be influenced by the decision of a key management personnel? Classification of cost according to the production or non-production. So does it relate to the production of the product or not? Then that is a production cost. If it relates, it's a production cost. If it doesn't relate, it's a non-production cost because it's a cost incurred by other departments within the organization. Then classification of cost according to nature. This is classifying the cost according to the elements of cost. We take a short breather, come back, and continue with the discussion. All right, so welcome back. Let's go, 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 let's go. So we want to crunch some numbers. We've been talking and talking and talking and talking and talking. So want to crunch some numbers quickly and see how some of the things we are talking about actually play out. So let's crunch some numbers here. Now we are looking at this question kit that can be downloaded on the website under this video on the website. So you open your management accounting course on the website, right? Not in the app. You can download the question kit in the app. So on the website under this video, so you go to November 2026 live lectures. This video, today's video. If you're on the live call and you go there right now, there is no video there, but you will see a blue link there. Click on it, question kit, and then you'll be able to download this question kit. If you're watching the playback, the video is there, then there is a blue link on either on top of the video or below the video. Click on it and you can download this question kit. So it's a question kit that we are going to be using in some cases, in addition to the questions we'll be solving in the book as we proceed. And we are coming in with question 1, okay, on page 1 of the question kit. Question 1 on page 1. I want to use that as a guinea pig for you to see some of the things that we have discussed so far and see how it plays out, okay? So, Atimbila Limited. Atimbila Limited. Please stay with me. One of the things you are going to be noticing is that I'm not going to finish reading questions to start solving them. It is a skill you have to develop to optimize your chances of passing the examination easily. The reason why that is important is because you need to have the ability to process the information in bits as you read. So you read, you work, you read, you work. Not to read all the questions, then you start, what am I supposed to start with? No. So I'm going to be doing exactly that. Throughout our session, hardly will you see me reading all the questions before I come back and say, let's answer. No, we will read and work. We will read and work. So follow my lead as I follow the Father. So that you'll be good. All right, so that's something I want you to be mindful of. So let's go. And we are going to be working together, so I need you to be active here. The requirement of this question says we should calculate the total cost of the badge. Stay with me. You see, in management accounting, there are what we call costing methods and costing techniques. Costing methods are the methods used to estimate the cost of an activity, a process, or undertaking. And so in Introduction to Management Accounting or in cost accounting, we have job costing, batch costing, process costing, service costing, contract costing. So those are costing methods. We use them to estimate the cost of activity, a process, or undertaking. Then we have costing techniques. Those are some of the things that we've spoken about: absorption costing, marginal costing, standard costing, and those things. Those are costing techniques. So it says we should calculate the total cost of the badge. The badge for 10 marks. Then II says the unit cost per product. Now, but at this point, you know this. We don't have to tell you this. Manufacturing companies mostly will produce in batches. So batch 1, batch 2, batch 3. Each batch will have a certain unit in that batch. So the I aspect of the question is saying calculate the total cost of the batch. Then the II is saying the unit cost per product. So to get the unit cost per product, we will divide the total cost per badge by the number of units in the badge. This is no brainer, right? This is no brainer. This is no brainer. III, the profit per product. At this point, from our KG2 understanding, you know how to get profit. So now, let's put the pieces together. So let's see. Atimbila Limited manufactures a product that goes through various workshops. The following budgeted overheads for the year 2023 based on normal activity level has been provided below. Now, remember the cost sheet we looked at a moment ago. We said after prime cost, we need to bring factory overhead. Now, we will talk about overhead in the next session, but permit me to bring it a little bit earlier to tell you about it, but we'll crystallize it later as we go. The way overhead works is that we are going to be calculating what we call the overhead absorption rate. Because the overheads must be absorbed into the production. Now, the overhead absorption rate is going to be the budgeted overheads divided by the budgeted activity. And as I said, we'll expand on this later on. It can also be referred to as the overhead recovery rate, ORR. Now, you calculate the overhead absorption rate to get the amount of the fixed overheads that you are going to be adding to the prime cost so that you can get your total production cost. Okay? Then you need to calculate that, then you absorb it. So you use the budget information to calculate the overhead absorption rate. Then you express that overhead absorption rate on the actual activity to absorb the overhead. Please, these are principles. Let's take it again. We use the budget information to calculate the overhead absorption rate. Then we express the overhead absorption rate on the actual outcome to calculate the overheads to be absorbed. So this is what I'm saying. If we come back to the question, we have the budgeted overheads for each of the workshops. So it is prudent for us to calculate the overhead absorption rate for each of the workshops. So first, we have the forming department. So forming department, overhead absorption rate for the forming department. Look at it. Budgeted overheads, the overhead absorption basis, they are using labor hours. So that will be 360,000 Ghana cedis. And I need some faster sound for the punching for me. Divided by the 30,000 labor hours. $30,000 labor hours. Can I have an answer coming up, please? Faster sound for me. Can I have an answer coming up? 360,000, 30,000. I'm getting 12 Ghana cedi per labor hour. You can confirm that, faster sound. Your brain has to memorize the keys on the calculator and be able to move with speed and accuracy. All that is part of your ability to utilize the 3 hours well in the exam or to pass the exam. So please don't sit down and be watching. Grab your calculator and challenge your brain to punch as fast as possible and build the muscle memory so you can be excellent in the exam hall. Next one, machining department. So overhead absorption rate for machining. For machining, it is 860,000 Ghana cedis. It is machine, so we are going to use machine hours, 50,000 machine hours. What do we have for the overhead recovery rate? $860. Hey, what's wrong with my calculator? At this point, my calculator is misbehaving. 860, 50. I'm getting 17.2 Ghana cedis per machine hour. Okay, Roland has confirmed that. So per machine hour. Stay with me. So you realize I have not finished reading the question, but I know to calculate the cost sheet, I need the factory overhead. So that is why I am calculating the overhead absorption rate. Because remember the principle we are using. Use the budget information to calculate the overhead absorption rate. Then you express the overhead absorption rate on the actual to absorb the overhead. That's the principle. So overhead absorption rate, what's the third one? Welding department. So what we got? 400,000 Ghana cedis. Divided by 36,000. That also we use labor hours. Okay. So 400,000 divided by 36,000. What we got? 11.1 Ghana cedi. Okay. Per labor hour. Now, all these are working, so you've not started answering the question yet. This is called workings. So this is workings. Then the last one is overhead absorption rate for assembly. What we got? 300,000 Ghana cedis. Divided by 20,000 hours. Yebenya den. 320, 15. Okay. So 15 Ghana cedis per labor hour. So that is the overhead absorption rate. Why do we know that we have to do this? Because in the cost sheet format, we need to add fixed overheads. And the fixed overheads, we must calculate the overhead absorption rate using the budget information. Then we can express that on the actual to know the overhead we will bring on our cost sheet. And nuntina, we are doing these workings. Muscle memory, understanding, application of the principles. Let's continue to read. Any questions, you know what to do so that you'll be assisted. Selling and administration overheads are 25% of factory cost. What are selling and admin overheads? That's non-production overheads, right? So we'll bring that later on in our cost sheet. For now, we can't do anything with it. An order of 5,000 units of the product, batch 3391, incurred the following cost on 31st August 2023. So these are the actual costs for the batch. Now we can begin to answer the question. So the total cost of the batch, and the badge number is 3391. So let's go. Cost sheet. We bring first, it says materials. So they didn't break it down, but we will know that it's a direct material. So material cost. 62,140. Next, labor. Ooh, labor. So labor cost, that is divided into 4 because there are 4 departments there. So forming, they are incurring 1,280 at 10 Ghana cedi per 10.50. So 1,280 hours at 10.5. Next, machining. Machining did 4,245.20 hours at 11 Ghana cedis per hour. Welding. I don't like the way I'm presenting. Don't worry, I'll restructure my slide because I like to do professional presentation. 900 hours at 10.5. Finally, assembly is doing 17. 1750 hours at 9.6 Ghana cedis. As I said, I will represent myself in a certain way to inure to my benefit of professional presentation. So I'll go like this rather. Okay, just so I can have a nice presentation. Professional presentation is important too in the exam hall. So you don't write by heart. Otherwise, then your marks will also be by heart. Okay, so let's punch out. What do we have? Fastest sum for me, 1280 by 10.5. 13,440. Okay. I'm getting 49,720. $9,450. 16,800. Am I confirmed across board? I don't want us to get to the bottom there. Somebody will come and say, "Oh, Sharon, don't tell me this figure is this." Yeah, the wrong answer. We will use the wrong answer like that. You think I'll bother? Okay, so plus 9,450 plus 49,720 plus 13,440. So I'm getting 210,000. 13,440 plus 49,720 plus 9450. 9450 plus 16,800. 89,410. Okay, 89,410. So that's labor cost. Stay with me. An amount of 1,050 was paid for the hire of special X-ray equipment for testing the wells. What type of cost is that? Hire of a special X-ray equipment. Hire of special X-ray equipment. Hire of special X-ray equipment. Direct expenses.
Direct expense.
Right. So direct expense, high of X-ray equipment. 1,050, 1,010. Sorry, 1,050. Now, there is a trap that somebody will say, okay, Nhyira, what if I don't do the thing in accordance with the pro forma of this and I just France everything? Yeah, if you France, your answer will still be correct. But you will lose about 70% of the marks. Do you get the idea? So the classification is key. Otherwise, you will lose 70% of the marks because it's not just about the final answer. It's about how you got to the final answer. Let's read. Hey, where's my kit? Okay. The time booking in the machine shop was this. Okay, so this is the actual machine hours. Selling price was 150 per product. That will come for the III part, the profit. So we are done reading. Okay. Summation of all direct costs gives us prime cost. So what is our prime cost? We add the 3, 89,410 plus 1,050 plus 62,140. So our prime cost is 152,600. Pro forma. After prime cost, what do we bring? Factory overheads. So we add factory overheads. Please, if I do O/H, it means overheads, okay? But don't do that in the exam hall. You should not do it. So, I'm doing your face. You should not do it, so you do it. Don't go and do it. So we bring the department. Stay with me. The second part of the principle I mentioned earlier is coming. So we said in overhead absorption, you use the budget information to calculate the overhead absorption rate. Then you express the overhead absorption rate on the actuals to get your overhead absorbed. So how much overhead do we charge for the forming department? For the forming, the overhead absorption rate was what? 12 Ghana cedi per labor hour. So 12 times, what was the direct labor hours used by the forming department? 1280. Machining, we got 17.2 per machine hour. Okay. 17.2 times. How many hours were used in the machine shop? We were told that the time booking recorded 6,430 hours. Welding, we did 11.1 labor hours. So 11.1. Welding, how many hours did they do at the welding? 900 hours. Assembly, 15 Ghana cedi per labor hour. Times, what was the labor hours for the assembly? 1750. This is what we mean by overhead absorption. You get it? Very simple, right? So use the budget to calculate the overhead absorption rates. Then the overhead absorption rate will be expressed on the actual activity, on the actual basis to get the overhead absorbed. Don't you like it? You see that management accounting is easy. Very, very easy. So we multiply up. Fastest one for me, what do I have? 12 by 1280. 15 360. 17.2 at 6430. 110, 596. 11.1 by 900. 9990. 15 by 1750. 26250. Please, fastest hand to confirm me. So we can add all up. Plus 9990 plus 110596 plus 15360. And that is 162. 196. Am I correct arithmetically? 1.1 times 900. No more say 9990. Okay. So back to the pro forma. So we have prime cost. Now we have factory overhead. We add the prime cost to the factory overhead, and that gives us what? The production or factory cost. So production or factory cost. So add it up. 152,600 plus 162,196. I'm getting 314,796. So that's our factory cost. In this question, we were told that there is selling and administrative expenses. So we add non-production overheads based on the pro forma. So selling and admin overhead. They said it should be 25% of the factory cost. So it means if your answer for the factory cost is wrong, you can imagine from here on your way to Zokbo. On your way to Zokbo. Oh, but I answered all the question. Yeah, but you miss arithmetically. You know, you can be formatically correct, arithmetically wrong. Oh, may God have mercy on us. Like your calculator can be feeding you with some wrong answers. And before you know it, we didn't say mununkwa. So 25% of that is this. Now that's the only non-production overheads based on this particular question. So we add it up and that gives us the A aspect of the question, the total cost. Of the badge. What do I have? 314, 796. And I'm getting 393,495. Any questions? Everybody good? 10 marks. The examiner has done this over and over again. 10 marks like this. Oh, when they say anything, it's not difficult. It's not. But the question is, 1, do you get a pro forma? 2, do you remember the 2 golden rules on overhead absorption? Rule number 1, use the budget information to calculate the overhead absorption rate. Rule number 2, express the overhead absorption rate on the actual activity to absorb the overhead. It's all principles, baby. It's all principle. That's all. If you understand the principles, management accounting, you just fly. You just flex. There you go. That's the I part of the question. We are done. II says, Ebazi, the unit cost per product. Now that you are here, it means the rest is not going to be a problem. So unit cost per product is going to be the total batch cost divided by the units in the batch. So what we got? 393,495. How many units were we told was in the batch? How many units were we told was in the batch? 5,000 units. One mark. That's why it's only one mark. Because you don't need miracle on this. 78, maybe 0.70 Ghana cedis. That's it. Then the last one. Profit per product. Profit per product is going to be the selling price minus the cost. Okay? So selling price per unit. Oh, let me just go this way. So selling price per product. We were given the selling price in the question to be 150 Ghana cedis. Less the total cost per product. Which we got from here, 78.7. And that gives us the profit per product. $150 minus 78.7, and that's 71.30. That is the answer to the question for 12 marks. It means if your overhead absorption calculation you screw up from there, you are on your way to Zokpo. And that's how interesting management accounting is in some areas, where if you commit one error somewhere, you could then get 0 for everything you have done. That is why being attentive, being conscious, being present, being alert is crucial. Because if you miss something, everything else is going to be house of cards. It wouldn't stand. Any other questions? That's all about that. That's all about that. That's all. You're going to be getting access to my writing slides in the key summary notes that will be shared with you. So you can take a screenshot if you want to, but you also get access to it in the key summary notes. Then you can copy your notes from there. Just like how those of you in the public, some of you are in the public sector, I don't know. So you got a note on in public sector. But if you want to take a screenshot, also slide 1 here. Slide 2 for the I part of the question. And then slide 3. For 2 marks, the examiner wants you to do this. Easy peasy. So this is classification of cost according to nature. And nature is bringing us to these areas, preparing the cost sheet or the cost card. That's it. The third one is classification of cost according to behavior. But we're going to touch on that in the next session as we continue. Your assignment is going to be on page 10, question 8 of this question kit. Page 10, question 8. Yeah. So page 10, question 8. Edwin Limited. So that's your assignment. Please note, assignment must be handwritten. Okay, handwritten. When you finish, you send it as a single PDF file via the assignment email address. And you can find the assignment email address in the WhatsApp group description. It is assignments, plural, at inhyirapremium.com. So handwritten, sent as a single PDF file via assignment at inhyirapremium.com. To be sent on Sunday, latest by Sunday, 6 p.m. So you can send it tomorrow or whatever, but deadline is Sunday, 6 p.m. So handwritten, sent as a single PDF file via the assignment email address. Now, if you are not, I believe everybody has sent PDF file before, but whatever be the case, there are free applications available, whether you're on Android or you are on Apple, iOS, whatever. There is an app called Cam Scanner. Okay, Cam Scanner app. It's a free app, Cam Scanner. It's a free app. So when you finish, you just open the app and just scan. Then you extract it as a PDF file, as a single file. Not that you send images or different file, as a single file. Okay, via the assignment email address. And let's see how this looks like the same. It's just similar to this question we just solved. So give it a shot. Let's see. Now, make sure you try it under time. As I told you at the in the introduction of our discussion, we are working on speed and accuracy. Okay, we are working on muscle memory. We are working on your ability to write as fast as possible, challenge yourself. So this assignment, you're going to be doing it at a time. There are other questions. Some of you have already enrolled in the practice question course. In the practice question course, there are numerous questions on preparation of course sheet or course card as well there that you can find. So expose yourself to as many questions as possible as we build the story up. If you can do that, it will stick better. Okay? Because as the days goes by, we're going to be adding more to it. So that's it about that. I'm going to wrap up around here today. In the next session, we're going to be getting excited into classification of cost according to behavior. And that will leap us into overheads, which I've introduced you to a little bit. So we'll be left with just some little thing that I will talk about under overheads. Then we'll get into the overall marginal costing, absorption costing, and activity-based costing. So throughout next week, we're going to be crystallizing on those fundamental areas. Then from there, if we still have some time available after doing those things next week, we may start with short-term decisions and start with relevant costing analysis. So you want to read ahead of me or learn ahead of me, you can look at marginal costing, absorption costing, preparation of profit statement, and then relevant cost analysis. You can read or watch the key summary videos on those areas so that next week when we are doing the discussion, it will just be a crystallization for you in that case. All right? So that's it about it. And in the next 12 weeks, we'll be going like this and see how far we can go. Okay? Enjoy the rest of your week. And we'll see you next week as we continue with the discussion. Au revoir.